I'm Carol Pino, and I am with Geopoll. We are a mobile polling company that gathers data from community-based data from throughout Africa, throughout the world, but particularly in Africa, and have been doing a lot of polling on food security issues, agriculture, predictions, things like that. But with me today, we have a fantastic panel that really brings together all the different sides of agriculture and the whole issue, from financing to governance. I don't think we have any real farmers, but other than that, I think we have everybody in there. So we have, do you farm at all?
Yeah.
All right, well, see, we do have all of it. All right. So we have Admasu Tedesse, who is the CEO of PTA Bank, a trade and development bank of Eastern and Southern Africa. And we have Bruno Wynn, who is the CEO of DEG, the German, one of the largest European development financing institutions. And we have His Excellency Akinwumi Adesina, Minister of Agriculture and Rural Development in Nigeria. And as he said, that sort of is self-explanatory. We all know what the Ministry of Agriculture does. And I can't see around. Okay. Patrick Lamani, CEO of DBSA South Africa, which is the Development Bank of South Africa, owned by the South African government, but has a continent-wide focus. And Lutaf Kassam, who is the Group Managing Director of IPS. So I think that we'll just go straight into it. And Admasu, maybe we'll start with you. Can you take us through, now you mentioned while we were back there talking about the pipeline, and you said nobody likes to talk about the pipeline. But my first question is, tell me about the pipeline. What is, there's a lot of projects that are being talked about. People don't know what is in the pipeline. What is the importance of this, and how can this be developed further?
Well, great. It doesn't help to be the first on the panel when I gave you some insight that people don't like to talk about pipeline. But I won't hide behind client confidentiality. I'll perhaps just give everybody a perspective. I think the good news really is, the whole world of agribusiness has changed. We're seeing a lot more interest, a lot more applications come through, and our portfolios are beginning to reflect the fact that agribusiness is now doable, right? So historically, there was always talk about certain sectors not being bankable. Agribusiness and infrastructure, two specific sectors in the past that were not seen as being very bankable. Of course, the world has changed very much in the context of Africa since the turn of the millennium. Infrastructure is on the move. We saw telecoms take off. We see power, of course, now picking up very much. And then agribusiness has been the latecomer, but we're beginning to see quite a pickup in the world of agribusiness. There's a lot more to talk in terms of the context, but we do have some policy makers on the table, so I'll try to leave some of the bigger questions of incentives, enabling environment, and the like to the policymakers. But I think for us as a bank, we obviously have had the benefit of seeing some of this new demand come through our portfolio. We have almost 24% of our current portfolio in the agribusiness space, so it's quite large actually. The portfolio makeup includes various types of crops. It's coffee, it's tea, it's sugar, it's cotton, and it also extends to other areas such as dairy. We also are very involved in the input side of the market, financing fertilizer, and facilitating the movement of the product itself in terms of trade finance. So we actually have quite a mix of exposure to different types of products. We see a lot more demand coming through now in terms of processing. Processing, it could be in the area of beverages, it could be in the area of packaging. There's a lot actually happening and coming through. We continue to see demand coming through also from organized groups, cooperative type entities that are organizing smaller farmers to better coordinate access to inputs, access to finance, and the like. So I think the general sort of message or the experience from our side on the pipeline front in particular is it's strong. It's coming through. It doesn't mean to say that all is well. Of course, there continues to be rigidities in the marketplace. The whole question of infrastructure, which is very key to any successful investment in agriculture, continues to be an area of great promise, but we have yet to see the full fruits come through. So I think there's still question marks because transport is a key sector for agriculture, clearly. And although there's been great improvements in infrastructure in Africa, it's been mostly in telecoms. We've seen quite a bit happening in terms of major artery systems in transport, but not so much on the feeder network system, which is very important again for agribusiness. So I think there's quite a bit to be done still on the enabling side in terms of infrastructure, which will help generate more demand. So maybe I'll stop here for now.
Thank you so much. Bruno, can you take us through some of the notable investments that you've had in agriculture at DEG, and also talk about how your institution and other development financing institutions can partner with the private sector to further develop an investable pipeline in the agribusiness?
Yes, many thanks. My colleague from IFC, when opening this conference, mentioned that for IFC the priorities are in agriculture and infrastructure in Africa, and it's the same for DEG, and talking also on behalf of the European Development Finance Institute, it's the same. Why infrastructure? Because agriculture development cannot be achieved on a sustainable basis if we do not have the infrastructure in place, so that's crucial. And why agriculture? Because looking at the African continent, there's a vast potential, because we have seen a lot of agricultural land which is not being used so far, or is severely underused. So we are very much convinced that Africa could feed a growing world population once we have the environment in place. And looking to the minister, I think one of the key aspects we would like to see as a Development Finance Institute, that African governments create the enabling environment which helps the private investor to come in order to realize this huge potential. The second issue I would like to mention in this audience is also that we as DEG, that we see that we have a reasonable pipeline of investors looking for investment opportunities in the agriculture sector in Africa, but they're hesitating to do so. Because whenever they are trying to invest in agribusiness in Africa, they are criticized by civil society as promoting land grabbing. And this by itself is a major investment obstacle to Africa. So in the agriculture sector, what we as DEG are doing, we have a very broad range of activities in Africa. We are investing and in farming, and I would leave it to Lutaf, which is our partner for many, many years, to elaborate a little bit more on that, also in the context of Côte d'Ivoire. But we are also helping in developing integrated agricultural development. For example, we as a DEG, we had been very crucial to help Sambeef in 2007 to start with their operation. And if we looked as of today to Sambeef, what they have achieved in terms of integrated agriculture development in Zambia, I think that's a real success story. Although it's still being criticized by non-governmental organizations. I have to stick once again to that. And we are very much also involved in creating value added. For example, we have a company which is our client in Kenya, which is producing juice out of products being produced by 38,000 small farmers. And I think this is a model we like very much, because with this kind of outgrower schemes we can help also to help small farmers to improve their business model. Final point is, with the help of the Belinda and Gates Foundation, we are investing heavily on a project which is called Kompaki. and which covers more than 60,000 small farmers in the cotton industry, and trying to improve the productivity, and by increasing the productivity of these small farmers, helping them not only to survive, but also to make a better living in the future. So there's a broad range of activities from agribusiness to supporting industry to dealing with small farmers, and I think this reflects very much what we as DFI are like in Africa to do in order to promote much more agricultural development in Africa.
Minister Adesina, we have read over the last 24 over the last 24 months that Nigeria has had exponential growth in the agriculture sector. And I'd like to hear from you, from the government side, what policies do you see that were put in place? Like, what from the government side did you do to make that such a friendly environment that you had that growth?
Thanks very much. And first, let me say that I was really excited listening to both Admasu and Bruno about their investment from PTA and also from DG. I'm very bullish on agriculture in Africa, and for good reason. You take a look at the population of the world, you're going to have 9 billion people by 2050. And they're not going to smoke oil, drink oil or smoke gas or anything. They're going to eat food. And you've got a continent that has 65% of all the arable land left to feed the world, which is a point that Bruno was beginning to allude to. And you look at the size of the market itself, it's mind-boggling. It's a $1 trillion market by 2030, food and agricultural market in this continent. And if you look at the size of foreign direct investment that's going to go into the food and agricultural sector, it's going to be about $45 billion by 2020. So you've got to watch this space. This is the space in which Africa has absolute comparative advantage in. And therefore, it must be a big contributor to helping the world to feed itself. Now, for us in Nigeria, we've actually understood that. And then, therefore, we made a number of decisions. First is that agriculture is not a way of life. Agriculture is not a development program. Agriculture is a business. Whether, when Admasu was talking, whether it's in seed or fertilizer, logistics or processing, value addition, everything about it is all about the business. So one fundamental thing is that agriculture must change from the way we currently deal with it as a development activity, which essentially just keeps a lot of people poor, into a business that can actually create massive amount of wealth to lead people out of poverty. And that is what we did when we started. Now, the other thing is that the private sector is not going to do it. We can't just say private sector. We've got to enable the private sector. So as a government, we decided that we were going to run what we call government-enabled private sector-led agricultural transformation, which means the government will provide what it should do, good policies, good institutions, infrastructure, incentives, and public goods that will allow the private sector to open up that space and really grow it for us as an economy. Of course, corruption is one thing you must tackle in agriculture, as with any other sector. In Nigeria, we did that. When I became minister 3 years ago, the seed and fertilizer sector in the country was massive rent-seeking system. And, we were losing billions of dollars in it. 40 years of corruption, it took us 90 days to clean that up and to take government out completely and put private sector into it with massive result. Today, seed companies, local seed companies grew to from 5 to 80. Investment by fertilizer manufacturing company, $5 billion within 3 years, from Aliko Dangote, from Indorama, and also from Notori. And you look at it, we've opened up what was a murky sector to be a really great sector today. So I think it's very important for us to realize that. The other point I want to make is that you look at Africa today, the most powerful tool in the hands of any African today is a mobile phone, right? And so we decided to use the power of the mobile phone to reach our farmers. So we developed this thing called electronic wallet, which will give seeds and fertilizer allocations to our farmers over their mobile phones. And we cut out all the middlemen in the process. Today, it's massive and it's working. We've reached 14 million farmers in 3 years using this system. We are the first in the world to actually deploy the system, and opens up these 14 million people to financial inclusion at scale. And we're working with the World Bank and others now who have expressed interest to scale it up into several other countries. Now, the issue of Africa produces a lot, yes, but Africa must add value to what it produces. There's no point producing cocoa and then you're not producing chocolates. There's no point producing tomato and then you're importing tomato paste. So in Nigeria, we focus, for example, on rice. We decided we must be like Thailand and like India in rice. We have the land to do that, and that's what we set as a policy. And it's working. In 3 years, we've reached 6 million farmers. We've gotten massive investments into this sector from Olam. Olam, as you know, the global commodity trading company, they're putting in $120 million into commercial rice farms and also into commercial rice milling in Nigeria. Aliko Dangote, which is Africa's richest person, I remember we were at, I think it was World Economic Forum in January, and Aliko made a statement. He said, if anybody told him that he would be investing in agriculture today, that he would say he just woke up out of a bad dream, right? But that the government is doing the right thing, which is the point that you were making, good policies and so on. Today in rice, is just putting $1 billion into commercial rice production and also integrated rice mills in Nigeria. It tells you what can happen when government does the right thing. But also look at cassava. Nigeria is the largest producer of cassava in the world. But we are at the bottom of that value chain. So we said, look, if we're the largest producer of cassava, we must become the largest processor of cassava in the world. So we're working to transform that cassava into starch, into ethanol, into sorbitol, into a whole range of things that we can have greater value added in. So we're working with Cargill, for example. We're working with Nestle. We're working with Coca-Cola. We're working with Nigerian breweries to actually have derivatives from cassava that you can actually use. The point I'm making there is that for Africa, don't just produce, add value to every single thing that you produce and move up the global value chain. Now, a point that was raised is how much private sector investment have we attracted? In 3 years, we attracted $5.6 billion of private sector investment into this space. This was a dead space that nobody would talk about. But you can imagine what we've been able to do there. But the key is actually we provide investment analysis, very solid investment analysis to investors so that they can know what the internal rate of returns would be, what your payback period for different types of investments and where. And so that has helped investors like this to really come into that particular space. But infrastructure was one thing that Bruno raised, and it's absolutely correct. I did an analysis with Monitor Deloitte, and I asked them, ask all these agribusiness companies, what are your biggest constraints? And tell you it's power, it's infrastructure, it's finance, and also lack of security of supply, feedstock to our companies. So we decided to create what is called staple crop processing zones in Nigeria, which are like your export processing zones, except that this time it's focusing on import substitution and getting the companies to go into rural areas where they can process and add value to things there instead of moving raw materials out. We're working with the World Bank on this. We've completed the master plans now for almost 14 of them. These zones are being upgraded with power, water, roads, and gas that will lower the cost of doing business by the private sector in these areas. So that's one thing. And then the last thing I want to say, it's really about the finance part. And I'm glad also that the two guys that I just spoken, my friends before me, we must de-risk the financial value chains for agriculture to get financing. You know, and I think that people actually, the perceived risk of lending is much higher than the real risk of lending. And I've done this in so many countries since my time in Rockefeller Foundation. What we did in Nigeria was that, working with Central Bank of Nigeria, we created a risk-sharing facility called NIRSAL, N-I-R-S-A-L. It's a mouthful, so I won't even try to pronounce it. But essentially what it does is to offer first loss risk-sharing arrangements for banks when they lend to different parts of the value chains. It's a $350 million facility, risk-sharing facility, that is leveraging $3.5 billion of excess liquidity from our commercial banks into agriculture. And it's working so well. In 3 years, we've had 0% default in all of these loans in Nigeria. And so the point I'm really trying to make is that it's not just, this is not a very risky sector. Today, the non-performing loans in agriculture sector in Nigeria is the lowest of all the sectors that we have in the country. And finally, for my colleague, the DG, we're working with KFW. As you might know, we've just launched a private equity fund for agriculture. It's a $100 million fund with KFW and also with Nigerian Sovereign Wealth Investment Fund, which is supposed to provide equity and quasi-equity financing for the SME agribusinesses. So it's really about getting them comfortable, doing the right policy, de-risking the agricultural, the financial value chain, fixing the agricultural value chains, and making sure that we can drive investment at scale. And so I think there's quite a lot of opportunities in this sector. When you started, you said, is there a farmer in this room? I'm actually a farmer. I just wear a bow tie, and I wear it for a good reason, because agriculture is very cool. Agriculture is a lot of money. You can imagine a continent spending $35 billion a year importing food. If that's not money, I wonder what is really money. So anyway, thank you.
So the one thing you didn't tell us is what you grow.
I grow all kinds of stuff. I run from rice to cassava to maize to tomato, but I'll welcome you to my farm sometime.
Ah, all right. Thank you so much. Patrick, you are involved in financing infrastructure as it supports agriculture. The minister has brought up, and in fact everyone has brought up, issues around infrastructure and the importance of infrastructure on enabling agriculture. There's no point in growing things if you can't get them out. I'd love if you could talk to us about your work and also about the importance of the support that agriculture needs.
Thank you very much, Carol. As the Honorable Minister actually has so ably highlighted actually the importance and the sexiness of agriculture. Thank you very much, Minister. Actually, a lot of people thought that agriculture is one area that really needs you actually to be very dirty. But it is something actually that really can make you very wealthy and really quite fulfilling actually, because every person you look at, you will feel like you are responsible actually for the very existence of that person because you've just fed them. We've just come back from lunch now. Actually, all that actually we were enjoying comes from agriculture. So this is an extremely critical sector in any economy. But just to come back to your question, Carol, we look at agriculture and agribusiness as very critical sectors in that it is one sector that offers what so many parts of the world, especially the emerging markets, tend to battle with, which is that actual of social inclusion. Because in that area where you find agriculture to be, it's an area where actually you find rural people, the most vulnerable in any society. But agriculture, if well taken care of, it really goes a very long way into solving that particular problem. And we can actually look at the Brazilian model. If you look at Brazil, agricultural sector contributes something like 47% to the national GDP. And 84% of that 47% actually is SMMEs and women-owned businesses. So it really goes to show you what are the possibilities if you drive your agricultural sector very well and effectively. And as DBSA, we are primarily infrastructure funder. As a DFI, we do believe that actually infrastructure is very critical for any economic growth and economic activity. So we tend to look at energy sector as the primary sector that we look at. I mean, as you had the agribusiness, when actually it comes to agro-processing, you need to make sure that there's sufficient energy, and on the continent, we have a very long way to go in terms of ensuring that we have adequate level and security of energy for the continent actually to thrive. And in this very agricultural sector, we have opportunities actually for bioethanol. We had the Honorable Minister next to me here talking about actually the possibilities around bioethanol. That is another sector actually which is in energy that says you can be able actually to shift the game in that you begin to see the agricultural sector and the rural economies actually contributing to the thriving of the urban economies, because bioethanol actually will begin to fuel the cars that people actually in the urban areas actually so much love and feel so much actually powerful when actually they're in their cars. We also do fund infrastructure in the water sector. And water sector and agriculture, I don't think actually I have actually to say anything more on that one. But again, a very critical enabler of agriculture, because when you do that and you do that well, because there are so many regulations actually that my minister next to me here and his colleagues on the continent tend to pass in ensuring that actually we protect water as a critical resource in the lives of people and also in the farming communities. And again, what comes out of farming is also the possibilities of cogeneration. We have seen sugarcane farmers and other product farmers actually that they can be able actually to generate electricity from the very same agricultural product actually that they plant, and that offers again an opportunity for rural economies to power the urban economies through actually cogeneration and contributing to the central grid, to the national grids in terms of actually what they generate from the agricultural products. We also do fund road infrastructure. It's a transport sector that covers all modes of transport, which we do believe is extremely critical for the thriving of the agricultural sector, because we find on the continent and many emerging economies, so many agricultural products actually being or rotting because the infrastructure to support and to store the agricultural outputs does not exist. Here I'm talking for things like silos, I'm talking for things like cold storages, which are very important actually to prolong the useful life of the agricultural outputs. So we look into these kinds of infrastructure because we believe they are extremely and central to the success of the agricultural economy and agribusiness sector. Thank you, Madam Chair.
Thank you so much. Well, Lutaf, I want to come to you to talk about the other aspect that is so challenging with agriculture, and that's the financing part. If you can talk to us about IPS's approach to agribusiness investing and how you decide things, what geographies and project types you support, and what, in your view, would be the best way to increase investment in agriculture and investment.
Thank you, Carol. First of all, let me just give you some background. I'm part of the Aga Khan Development Network. We operate in more than 30 countries, mainly in Africa and Asia, and about 15 countries in Africa. We have a very holistic approach that development can only take place if you do the economic side, the cultural side, and the social side. So you'll find us in hospitals, schools, you'll find us in cultural things, but you'll also find us in the economic activity. Now, in the economic activity, we are also very, very diverse. We're in aviation, we are in media, we are in tourism, but we are also very, very large in infrastructure and agro-processing. Some of our partners who've been with us are the IFC and the DEG, as Bruno mentioned. We've been in Africa for more than 100 years now. What are the sectors that, so in infrastructure, people probably know us from the Bujagali in Uganda, or the Sawa Power project in Kenya, or the Azito in Ivory Coast. But in the agro industry, we are also very large. Today, we have 150,000 farmers that supply to us 12 months of the year at a guaranteed price on different products. And the different products are processed vegetables, concentrates of fruits, in the leather business, in the meat processing. We are in the Artemisia, which is a medicinal product for malaria fighting that we actually operate in itself. So what kind of model do we have? And you asked what are the geographies? I think for us, the approach is more bottom-up, to say where are the gaps, and that's where you try and actually move in. So in West Africa, for example, we are in sugar and cotton. In East Africa, we are in vegetables, in meat, in processed fruits. The issue for us is that our model is, it's a very simple model. I think the model says farmers are very simple people. What they need is a price before they plant. Number two, a guarantee that you pick up every single kilo that they produce. And most of all, that within a 15-day period, you actually pay them for it. Now, it sounds very simple, but then you ask yourself, why is it not happening in Africa? Because for us, it's worked. We started into farming not because we wanted to be in farming. We wanted to be in what the minister said, value addition. So for us, we started and said, let's try and add value to the produce of the farmers in Africa. Very soon, we found that there were distortions. There were distortions because a woman would grow cotton, get to the ginnery, And there you'd find a trader. And the trader would say, this is worth 200 shillings, do you want it or not? Obviously the woman accepts it, but she will never grow cotton again. So what we have a model is it's totally integrated, fully integrated from farming, from giving them all the inputs, giving them all the extension services. This is without any government help at this stage. But the help that we get is from people like DEG, for example. So we operate cotton. We have 50,000 farmers in northern Ivory Coast. During the 10 years when Ivory Coast was in a shambles, etc., we had to be not just the producer of cotton, but we had to be the hospitals, the schools, the rural development in all aspects. And this is where partners like DEG came in very useful, where they would give us access to funds that we were able to take care of all the needs of the family. So it's incredible that in 10 years, when we couldn't ship any goods out of Abidjan, we still had 50,000 farmers going and kept that population alive. Carol, I don't know if that answers some of the things as to the geography itself. If your question on what needs to be done, I think, and okay, I've got I've got 3 financiers here, so I don't want to go too much in the financing side of it, but what I would say is that I find a lot of money from the World Bank, from other multilaterals, from the NGOs, and the concentration always on that money is on the supply side. How do you produce more? I think it's high time that we started working with the people who are in the market side of the equation. So for example, if we were in the, I mean, we're doing some passion fruit concentrate. Today, the farmers are growing it on a bush style. If they only had $120 each, they could increase the number of fruits they grow by 400%. Now remember, for us as a company, we do not need the money, we do not need those subsidies, but they need to go into the farmers. The issue is people are going to say, why don't you ask them to go into the microfinance? By the way, our group also has microfinance banks. But I think as soon as you start creating layers, and the small-scale farmer just moves away from it. But if there was money available, if there was real will to try and do something, then rather than going through governments, rather than going through cooperatives, rather than going through major institutions, it's very simple. Let's try to find something that the farmers can be there. You've got a 100% guaranteed market. So it's not like you're going to put your money and then you ask them, where are you going to sell it? The question sometimes is asked of us, why don't you give them the money? But our point is that if we do that, we lock in farmers. What you want to do is to empower farmers to say, if IPS doesn't buy it at the right price, I can go to Mr. X or Mr. Y. And this is why we need more intervention from the World Bank, from the governments, but without too much of the red tape. I don't know how to say this. I mean, we do very large projects as well, so we know the benefit of that. We know the Bujagali, $1 billion project, what it does. But we also know what agro-industry is about. And I think for that you need to come right to the ground level. Just for you to know as a group, because we have a very strong social dimension, there are times that we can buy the produce 15% cheaper from large farms. We will not do it. We will still go down the small-scale farmer route because the impact of that on civil society, if you go into those areas, etc., is massive. So while very large projects are good, and we actually do the large projects, I think our greatest strength, and for me personally, is when we have those 150,000 farmers. One company in Kenya alone is, because if you take an average size of 8, looks after 1 million people out of a population of 40 million. If one company can do it, surely we can scale this up. And it just needs people talking to each other. So in the past, for example, IFC is a shareholder. Does the World Bank engage with us? No, it's the IFC that engages, or the DEG, and say, do you need any funds? And we are saying we don't need any funds. The farmers need the funds. And small money, in aggregate, it could be a large enough amount to increase the production several-fold. Thank you, Carol. I hope I've answered it.
Yes, thank you so much. We're going to take questions from the audience in just a minute, but before we do, I'd like just to, you brought up the things that the World Bank could do, and I'd like to actually just go down with everyone talking about this just very briefly. Everyone talks about how agriculture is so important, but, the question is not just, we now know that people are listening to this, but what concretely needs to be done? So what could the World Bank do to help build bankable agribusiness projects, and how can they help to scale up the pipeline of bankable projects? And I'd just like if we just went down and everyone just talks very briefly of ideas of, concretely, what really could be done. And for you in the audience, please think of your questions because you're coming next.
Okay, well, maybe being very specific, there's two things I think that the World Bank can do. I think one is on the general side of things. Agribusiness is like any business. So there are certain things that affect all businesses. And so, for instance, the whole question of the investment climate, environment of doing business, that, of course, is a rising tide that lifts all boats. In fact, the one thing that's happened in Africa has been a general improvement in the business environment, which has made agriculture also now much more relevant compared to all other business areas, whether it's retail, construction, banking. There's been a huge turnaround in the attractiveness of Africa, and agriculture is a part of it. And I think clearly the investment climate aspect, which of course the World Bank is quite specialized in, together with one or two other institutions, that's helped a great deal. I think we need to keep that in mind. Of course, finance is the lifeblood of any business. Access to finance in Africa across all business segments is a huge issue today. It's always in the top 3 constraints listed by any private firm or even state-owned enterprise in order to grow what they're doing. So the question is, how can we continue to deal with that aspect of things? We've spoken a lot about infrastructure. I think the World Bank is doing quite a bit there together with the other DFIs, and indeed governments themselves are putting in record levels of financing into infrastructure. So that's one part of the picture, but it's not the only part. Any business will tell you today that getting access to working capital, getting access to trade finance, getting access to long-term finance, these are serious constraints. That's a general business environment issue that still needs to be addressed, and I think the World Bank has a role to play, both on the policy side, but also on the input side. On the input side, that's the role of the IFC to provide or to facilitate access to credit in the environments where credit is still a constraint. Of course, the good news is Africa has also dramatically improved its financial sector. I think the good news is the banking sector is so much more advanced today than it was 10 years ago. There are so many more banks. You just look at any ratio on access to credit, it's improved. So I think strengthening banks in Africa also is part of the solution, so that the ordinary borrowers who are too small to access big DFIs, whether it's the IFC, DEG, or even PTA Bank, would have access to normal commercial banks so that they can get certain things done. I think of course, there is a strategic issue. Maybe the World Bank can handle it, but there's always been a structural problem in the past that's worked against agriculture in Africa, and that's the terms of trade, the relative pricing of food versus other products. And the one big shift that occurred about 7 or so years ago is the price of food, the real prices of food went up in a big way. We all knew what happened to commodities. Oil and metals went up in a huge way in 2003. It took 4 years for food to respond. Food really peaked in 2007. It came down again, but all indications are that food prices will continue to grow going into the future. That's actually a good thing, because that stimulates the supply side of the solution, and we see what's happening on the demand side. Incomes are rising, not just in Africa, but also in Asia. Asia is actually a very interesting part of the African ag story, because Asia can be an important source of demand. And I think then the question is trade policy. Can the World Bank help to strengthen trade policy, trade within Africa? And of course, there's other African institutions who will do this, but also trade internationally so that African producers or investors, global investors in African agriculture, can readily export to the rest of the world and take advantage of the comparative advantages that the minister spoke about as being very key for Africa to to leverage itself in this space. So just to summarize, I would say finance, strengthening access to finance, dealing with trade policies, and of course continuing to build infrastructure, not just large-scale infrastructure, but addressing smaller-scale infrastructure such as storage facilities and feeder roads that actually make a difference to the producers in the rural areas.
Thank you so much. I think you've given us quite a comprehensive list. I think we'll just add on as we go down.
Yeah,
Fantastic. Please, Bruno.
Admaso has already touched on a lot of issues, and I fully subscribe to this. So let me add only two things. I do not believe that the World Bank should try to make projects bankable. This should be left to the private sector. But what the World Bank can do is simply to reduce the risk of private investors, including small farmers. And I like very much what the ministers said. Accept that agriculture is a business. And by doing that, also accept that small farmers are entrepreneurs. So creating the right incentive system for them. So in many African countries, the farmers are still confronted with extremely low prices for their products. So if this is the case, how you can expect that small farmers are ready to invest, even if they have access to finance? It will not be feasible. So getting things right, I think, is a substantial issue. The agriculture finance is a real big issue, because I fully agree to what the minister has said, that agriculture finance is still perceived as an extremely risky business. And to some extent, it is risky, also in view of climate change. So we have to accept that. But then the question is how we can we introduce, also with the help of governments, innovative schemes. For example, guarantee schemes could extremely helpful to make banks more willing to provide access to agricultural finance. And in doing that, once again, I strongly believe that the World Bank has two major tasks. One is to provide policy advice to governments, which includes also provide access to governments to best practice in other African countries. So simply replicating best practice instead of trying the most expensive way to invent the wheel again and again. And secondly is also to help governments to do it by simply providing the necessary inputs. And I think if doing that, and summarizing, it would create much better opportunities for private investors in dealing with agriculture development in Africa.
Much, Bruno. Minister Adesina, if you could talk about from the government side what you feel that where the World Bank could really add and help you in promoting agriculture.
I think that the mission of the World Bank is to end poverty in the world. And so the World Bank cannot really succeed in that unless it gets agriculture right, because that is really where majority of the people in the world, the poor people, depend on for livelihoods. So as I said earlier, it means a total paradigm shift itself that, in the way the World Bank, Africa Development Bank, the other DFIs, IFAD, and everybody else deal with agriculture, begin to treat agriculture as a business. It's a wealth-creating sector. We've got to do that. I think it's fundamental that that needs to be mainstream into the world of the World Bank and also the work of the IFC. It's not just about, but look, you cannot redistribute poverty anyway. You've got to create wealth. And so the way to create wealth is to let the private sector engine drive this particular sector. So I think this is fundamental for me that needs to be mainstream. The second one is a point that Bruno raised, which is within the context of climate change. Now, there's going to be quite a lot of vulnerabilities for most of the farmers in the world, in Africa, because we're not using that much of irrigation anyway. So coming up with really good instruments, instruments like insurance, weather index insurance, for example, we know it works in India, but the question really is how do you scale it up to reach millions of farmers? And I really believe that in the earlier phase of scaling up such risk transfer mechanisms. It's important for the bank, the countries, to really subsidize or support smallholder farmers to be able to afford and have access to these weather index insurance products. Otherwise, it can't really go to scale. But if you actually support it in the early phase of it, it means you can crowd in a lot of insurance companies into it. They will innovate, they will develop new products, the premiums will go down, and then it becomes more affordable to farmers. So I think it's something that the World Bank needs to push. One can't talk too much about infrastructure. I think infrastructure is big. Energy deficit in Africa needs to be addressed. We need to actually invest heavily in the issue of rural roads, are very important. In fact, if you go around, if you put a rural road somewhere, you're most likely to see a lot of SMEs actually aggregate around those areas. So there's no fastest way to reducing poverty than actually working on infrastructure to connect people and to move goods and services, not only within countries, but also across countries. And finally, I think the reforms that the World Bank, or the organizational changes that the World Bank has done, where you now have the World Bank and you have MEGA, you have IFC working as one to deliver, is so crucial. Because for agriculture, you need infrastructure. You need to have finance, commercial finance. You need IDA financing. So it's really deploying a mix, the right mix of instruments across the whole organization that I think can really help. And of course, in everything, I still believe that at the end of the day, countries are the ones that should put their money down into things. So the World Bank should leverage countries and private sector resources, not try to displace them. Thank you.
Thank you. And Patrick and Lutef, we're just going to very briefly have you talk about, if you can address specifically how the World Bank can, in partnership with the private sector, further develop an investable pipeline of agribusiness transactions.
Thank you, Carol. I think it's quite important, given the power that the World Bank has at its disposal and the convening power that actually it also has, that actually we can begin to look at the feasibility study funding as well as a project prep funding actually for agricultural projects, because that's where the biggest problem lies. And that's where actually once you have been able actually to put down that investment, that you can then begin to crystallize the economic dynamics of the agricultural projects, which makes it easier for the private sector and the commercial banks to then be able actually to be crowded into those projects and for those projects to become bankable. But I think the other advantage that the World Bank has is the global benchmarks and the global lessons that it has within its personnel across the globe that actually can be able to share with the African governments and the African DFIs and private sector on how actually to best fund and make agricultural projects successful. I think the other thing that is quite important is for the World Bank to work with the African governments and the African DFIs to drive investment in this sector, especially around setting up enabling regulatory environments and skills development in this sector, because that is very, very, very important. And also the funding models, actually agricultural projects and appraisal models actually are required, because once you have the right skill set to appraise these projects, you then can be able also to look at how you can de-risk the agricultural projects. Lastly, it's the issue of technological advancements that could also be brought to bear within the agricultural sector. Here I'm talking about the aeroponic farming, which actually then takes away the issue of seasons. It then makes farming a 65 days a year. It also looks at actually how you can best conserve water, which actually is such a critical, scarce resource for so many parts actually in the emerging markets. Here we're also looking at rain radars as well. Rain radars actually that begin to look at weather patterns predictions. And when is the rainfall going to come and how much rain can you anticipate? And then how can the insurance as well as the farmers begin to plan their agricultural outputs and products accordingly. I think the irrigational technologies are also things that we can also bring to bear within this sector. There is a huge room that the World Bank actually can play in making agriculture a thriving sector within the continent. Thank you, Chair.
Thank you. Luta?
Carol, I think a lot of people have very eloquently said what the World Bank can do, so I don't want to go into all of that. I just have two things that I'd say. One is, I'm even impressed listening to the minister, what Nigeria is trying to do, etc. So, and I ask myself, why isn't this information getting through to all the governments in Africa? I'm saying other models that have worked in Asia, but it's not just the government, even the private sector. I know we always assume that the private sector is smart enough to know what's going on around the world, and they'll find it's not true. Sometimes we need a jog as well as to what are the best practices, what are the stuff that comes out. So to me, I see a lot of strength in the World Bank being able to share things that have worked. It doesn't mean that it'll work in our countries, but it starts off the thought process where people can work. And the one other area which was just talked by Patrick just now, you see the World Bank fund so many 1,000 kilometers of roads. That's infrastructure. Where we don't see the World Bank very strong is irrigation. I am a Kenyan, I come from Kenya, etc. And there we only keep on praying, everyday prayers that the rains will come on time. So you can have large schemes, but even at the community level you can have schemes. There are small water pans that we do. The water pan costs $100, improves the productivity of the farmer by 60%. Now, I know these numbers will be very small for the World Bank, and they'll say this is not exciting. They might not even be exciting for Bruce if I start aggregating this. But somewhere we need to find the mechanism how this happens. So I'm saying what needs to be done. I'm not saying the World Bank itself has to do it, but they have to be the enablers to get this kind of stuff. And it's very simple stuff. It's not rocket science at all, but the impact of that can be enormous. Thank you.
So much. Well, we'd love to have some questions from the audience. We don't have a lot of time, so I think we'll take 3 questions and just take them together. Can anybody who has a question raise their hand? Surely there must be a question, please. Yes, please go ahead. Is there a microphone coming?
Good afternoon. I'm Donna Sims-Wilson, an investor in Africa, and currently I'm an investor in something called the Pan-Africa Exchange, or PANEX for short, which is a brand new commodity futures exchange. It's very interesting to me that commodity futures exchanges exist all over the world, the CME in Chicago, the ICE, the LIFE, all these exchanges around the world, but there is no such thing as a commodity futures exchange in Africa outside of South Africa. And several of you have mentioned pricing for food as a critical issue to development of agricultural markets. And so I'd like to just ask your opinion about commodity futures exchanges on the continent. Thank you.
Actually, there's the ECX, Ethiopia Commodity Exchange, and it's doing very well. And there's a bunch of other initiatives, but I'll let the panel answer that. I just got back from working with Eleni LLC across Ghana, Nigeria, Mozambique. And my question, there was a question that was asked here about what's being done institutionally from the regulatory framework to help, and I think it was Mr. Wen who asked it, make Africa more of an attractive destination. And also in terms of what our Honorable Minister Adesima said regarding adding value to the agricultural value chain. One of the things that I didn't hear anyone mention were really what's being done and, as far as these market structures, such as a commodity exchange, or it doesn't have to be necessarily every country's got a commodity exchange, but it could be a regional one and so forth. and how you'd be working together to make these things happen.
Another question, we'll take one more, and then we'll have people start answering. Anyone else have a question? All right. Oh, I'm sorry. Go ahead. I'm sorry, who was it? Yes? Oh, I'm sorry. The lights are, you're right by the light, so I didn't see you. I'm so sorry.
And my name is Chris Kays. I'm coming from South Africa. I represent the KwaZulu-Natal government, and we're working on an initiative where we want to showcase a number of infrastructural projects in different sectors in infrastructure to try to bring together best practices, bring together the business people from the continent, but have the diplomatic corps represent them when they come down, so you know who are the real project owners, you know who the real guys are that the governments believe can do the business and structure deals between each other, because I think there's a lack of communication across borders, especially on some of the infrastructure projects on interconnectivity between the continent, as far as roads, rails, to get the products to the other markets. So moving forward, but learning on best practices like the Nigerian agriculture. In South Africa, we have, I think right now, nearly 3 million hectares of irrigated land that is unproductive because of our policies, which, I mean, as much as they're good, they're protecting a lot, they're not driving investment into the sector. So learning from your experiences and then moving forward, how would you, I guess, propose to move forward on doing larger collaborations continentally? Thank you.
Thank you so much. I think we will switch up the directions and have Lutef start with just your thoughts from the three questions.
By the way, I think the question of the commodity exchanges, I think they're taking root in most parts of Africa now. So you may be right that it's very, very pronounced in South Africa.
And it's all done.
But it's there are several initiatives on this that are on. I think a lot of the questions were on the regulatory side, but I agree with the same comment that you made about best practices to see how we can share on that. I must say the minister from Nigeria, he gave us some very large projects, but it was interesting that he even came down to Kenya to see our project, to go and look at the small farmers, and the small farmer was 1/8 of an acre, I remember, but I remember him spending time. So it's that what leads you to sort of understand from each other what's going on. Thanks, Carol.
Thank you. Patrick?
Thank you, Carol. I think on the issue of the commodity future exchange on the continent, I think we're still a long way, but what actually might actually give us traction in that direction will be if we can begin to piggyback on the stock exchanges actually that we have on the continent. Because my understanding is that actually there are very similarities in terms of the capabilities and the understanding how actually it could be done. But the future of agriculture on the continent offers a massive potential actually for the Pan-African exchange. So it is something that actually it will take a lot of working on by the various governments on the continent. I think it is something that we might have to work on awareness and educating our political principals so that they can better understand and appreciate the benefits thereof. So it's then that actually we can begin actually to have meaningful traction. But on the issue actually of larger collaborations on the continent, my advice is we might have to look at things like the regional economic communities, the RECs and the AUs and the African Union, because working across governments for projects actually that struggles and covers many countries, it involves a lot of political and sovereign issues. Then working with regional bodies actually gets to help you to navigate those political dynamics. Again, it is something that you might have actually to make sure that you get the agricultural desk within the regional economic communities that actually will give a proper guide on how actually to best target transnational businesses and agricultural businesses in the various regional economic communities of the continent. Thank you, Chair.
Right, well, we are told that we actually have to stop, so we will not be able to, but I would just like to give 1 minute of the last word to the minister to sum things up, if you could. And I'm so sorry to Bruno and Masu. I'm sure you had wonderful things to say. We can get them afterwards, so sorry. But Your Excellency, if you can just sum it up for the last minute and
Thank you.
the last word for it.
All right, I'll speak for Bruno and Admas. I think right. I think on the market information thing, first is that when people talk about commodity exchanges, a fundamental basis for that is must you have a very well-functioning market information system. So I think that's beginning to develop in many of the countries in Africa, as you have heard. But you have the Malawi Commodity Exchange, you have the Kenya Agricultural Commodity Exchange, you have the East Africa Commodity Exchange, which Hayes Holdings, Olumelu Foundation, and others have done in Rwanda. You also have the Ethiopia Commodity Exchange that's actually done very well. I think attracted almost, I think for sesame and coffee, I think they did about almost $1 billion, sometimes about a year ago. So we know that these commodity exchanges are there, and they need to be deepened significantly. What I just want to say about the issue of learning is that breaking down the barriers between our countries is very, very important. For us in Nigeria, for example, I spent a lot of time in Kenya, a lot of time in Tanzania, in Uganda, in several other countries, learning what they are doing and also sharing with them. And we need to do more of that. And I think the World Bank can help, and also the Africa Development Bank, in documenting best practices and sharing that more broadly among our countries. Also, the Africa Union can play a very important role with regard to that. But the last thing I just want to say is that it's so crucial to also get the ministers of finance and the ministers of agriculture always talking. Because we can be here talking about agriculture all the time, but you do need to have the ministers of finance and agriculture talking. We started that now with a session we had during the UN General Assembly, which we did, and it was fantastic. So I just want to encourage that kind of collaboration, because so many of the things that we have to deal with in agriculture require that the fiscal issues be addressed, and that requires that you have engagement with the ministers of finance, but also central bank governors in most of the countries. I might not have addressed all the things Marcy and Bruno want, but I think they will agree with me on those ones.
Thank you so much. Well, we've had a wonderful discussion. Thank you to all the panelists for everything they brought. We've heard about all the complexities of agriculture, where the World Bank can be engaging. And I think best of all, the most important takeaway was from the minister: agriculture is cool. So, thank you so much.
Doing business in Africa, you can't afford to be without Africa Investor.